We need to talk about the self-proclaimed apartment rock star. Let's talk about the weakest housing market according to KB Home. Let's talk about the mortgage spread and what might be going on. We can talk about what Redfin is saying about investors. And finally, we will close with something that Renzo Sithi is talking about, when to buy a home. And I will answer that question as well. Alrighty, folks, let's start off today by talking about the self-proclaimed the apartment rock star. This is a gentleman named Robert Martinez. He is a syndicator at Rockstar Capital. This article was written in The Real Deal. Thanks to Jen for sending it to me. Again, The Real Deal is something I look at almost every day. Again, Robert Martinez, the apartment rock star. He purchased 280. Lo and behold, it is now going through the foreclosure process. After negotiations with the lender, he was unable to come to an agreement, and he is losing a building. Folks, as we've talked about for about a year, this is coming. We are in the first inning of this. I believe it was Jeff Green who talked about we are in the first inning, and I agree. It is interesting that the first two, at least publicly seen foreclosures on syndications, happened in Texas. This one was in Houston as well, I believe. The article in Real Deal highlighted that other syndicators such as Tide Equities and Rise 48 are also kind of feeling the pain. So again, $51 million borrowed in 2022 as a loan. How much of that was lost? How much equity was lost? Because again, remember, 51 million is the loan. Above that is LP equity. So you have to figure there's $25 million of LP money vanished because of this foreclosure. And unfortunately, folks, as we've talked about for quite a while now, this is just the beginning. Unfortunately, many LPs have lost money and don't even know it yet. So again, just another sad example. It is interesting to point out that the apartment rockstar still owns 4,800 units across Texas. Yeah. I wonder how many of those have floating rate debt. How many of those were levered up? Yeah, we're going to find out. How about number two? Lance Lambert, a great follow on Twitter and Thursday guest on this channel. He had an interview with the CEO of KB Homes. And I thought the conversation was interesting because what can it tell us? Well, first, KB Homes CEO said the weakest market is Denver, Colorado. The strongest market was, interestingly enough, the Inland Empire, as well as the state of Florida. Austin, which is a market that we've talked about a bunch, was actually doing okay because at KB Homes, they're focused on building smaller and cheaper homes. The higher priced Austin builders are suffering quite a bunch. In normal times, the spread, again, this all came from an article that Lance Lambert wrote, go check it out. In normal times, the home premium, right, new versus existing, is about 10 to 15%. During the run-up of 2021 into 2022, some builders were seeing that spread or premium rise to about 30%. Right? So now what is happening is builders are having to pull back on that. So again, very interesting to see. I had not heard Denver, Colorado being slow. Maybe if you invest in Denver or know someone, I'd love to get more details on what's going on there. Maybe it's just too many builders. Maybe it's the wrong footprint. Maybe it's the wrong size. I don't know, but I would love to hear from you. Number three, we should talk about the mortgage spread and what does that mean? What might it mean? Again, these are all speculations and guesses, but we look at this stuff every day and we try to internalize the data. So if you didn't know, the mortgage spread ended Friday at 290 basis points. Now, unless you're really geeking out on this number, that means nothing to you. What you should know is for most of the last 4 months, the spread has been over 300 basis points and really kind of like 308, 310, 311, something like that. So this is a noticeable drop. What might it mean? Well, my guess, pure speculation, is home buyers have pulled back in such a forceful manner that banks are having to lower rates. This is a supply-demand conversation. They took rates all the way up to 7.49, I believe was the peak for owner-occ best credit, 20% down, and they saw buyers pull away. Banks, one of the last things they have to make money in this high-rate environment is home loans. So even if the Fed kept rates where they are, and we assume the 10-year Treasury stayed where it is, you could, in theory, see mortgage rates fall about 110 basis points. You could see rates come down to about 6-ish%. Not saying it's going to happen. I'm just saying mathematically that would be not a surprise. But again, this is something we have to watch. The mortgage spread could easily bounce over 300 basis points next week. But it was interesting to see it break pretty significantly on Friday. Number 4, Redfin. Redfin put out an article that says investors have bought 45% less homes. That is in an overall market drop of 31%. So investors pulled back more. All I got to say, folks, is I'm proud of you. We do the work. We don't buy negative cash flow. We don't gamble. We don't bet on appreciation. If you're in the one rental at a time community, your job is to figure out average. And if the return is acceptable, then go get good or great deals. We don't gamble. We do the work. And we'll talk more about that in point number 5. In addition to Redfin, Fannie Mae says that the serious delinquency rate is all the way down to 0.54. 0.54 again probably means nothing to you, but how about this for context? That is the lowest since 2008. It is also lower than before the pandemic of 2019. Think about that. Lots of people have been talking about waves of foreclosures and this and that. It's not coming. Even if unemployment spiked out of nowhere, you're now a year, 18 months away from any particular mass foreclosures. And then finally, Bill McBride, again, a wonderful follow on Twitter, very data oriented. Really appreciate what Bill puts out. There will not be any cascading of price declines. This is a big difference between the 2008, 9, 10 crash, is we had supply continually coming on the market because mortgages would reset. Some of you have asked me to say, why is the US different than, for example, the UK, who is suffering right now? The UK just had the largest price drop on record. It's the mortgages, folks. It's the mortgages. We have 30-year mortgages. We also have 30% of folks that own their property free and clear. They're not in financial stress. With the rapid rise in interest rates from 3 to 7% or 7.5%, you're encouraged to stay put. You may not like that. You may want a wave of crashes, but that doesn't make it so. And then finally, let's get on to Renzo Sithi. Hopefully I'm pronouncing that somewhat close. He was asked, or he had an interview with a couple who was renting for $1,800 in Seattle, and then they signed up for a $4,500 mortgage. Wow, that is quite a shock. Apparently the husband is having sleepless nights and stressing out and all of that. You can go ahead and read the story. But basically what Renzo said is there are 5 things that he believes you should do before you buy a home. I will go through his 5 and then I will share with you what I think. So number 1, will you live in the home for 10 years? Right? Are you going to live there for 10 years? Or is this just a hop, skip, and a jump on a path to something else? Number 2, is your total housing cost, right? Mortgage, tax, insurance, repairs, all of that, less than 28% of gross? Number 3, have you saved 20%? Number 4, are you okay if the home price goes down? And then number 5, are you excited or dreading the home buying process? So again, that's Renzo 5. What do I say? When is the right time to buy a home? When is the right time to buy an investment property? To me, the answer is always the same. You need to define your buy box. What are you looking for? Then you need to figure out what an average deal is, whether it's a home purchase or an investment purchase. Once you know average, and again, I was asked today, how do we know, or let me step back, two-part question. Sounds like you were saying we should wait to buy. How do we know when the right time to pull a trigger? One, I'm not really saying wait to buy. I'm saying do the work. I don't want you to gamble. I don't want you to be emotionally tied to buying something. Sometimes you get up to the, get up to buy something, you get all excited, then you have buyer's remorse. I want you to take the time. I want you to do the work. I want you to spend 60, 90 days, whatever it takes, to declare what your buy box is, declare what an average deal is, and then, and only then, you can start writing offers on good or great deals. You, again, maybe list price, maybe not. In this environment, probably not. We don't care about the cost of capital. It is one variable in our spreadsheet. It takes work. It takes consistency. But we know here at One Rental at a Time, it works. So again, to the individual, I actually replied to a message. I am not saying wait. I'm saying do the work. And then, if you know what average is, you can move forward. So how do you know when the right time to pull a trigger? Do you know what average is? Once you know average, it's confidence building. Because then you can go into a situation going, I am going to get a great deal. What we do at One Rental at a Time is we don't do average deals. We don't do alligators or negative cash flow. So that's what I hope for you. Again, we do have a light earnings week. I did note a few. We got Wednesday, Dave and Buster. It'll be interesting what's going on with the consumer. We got CS.ai, which again, be interesting to see what's going on with artificial intelligence. Thursday, you got DocuSign. Friday, we got Kroger's. Of course, we'll be looking at the weekly unemployment claims on Thursday, mortgage apps on Wednesday, and then finally, we do get consumer credit on Friday. Folks, this is the Daily Financial News. I hope you enjoy it. Like, subscribe, comment. Don't forget to check out what my team is doing. Right, we created a second channel called the Daily Financial News where they will take this raw form, this live format. They will add bullet points. They will add pop-ups to make it even more educational. I'll put the link below. You can go check it out, the Daily Financial News. We got 1,800 folks subscribed to that. So thank you, thank you, thank you. We only do one video a day on that channel. On this channel, of course, we do 4, 5, or 6. But on the Daily Financial News channel, we will do one. And then finally, thank you for all the folks that signed up for the boot camp. We had 4 or 5 more signups in the last 24 hours. Remember, if you do sign up for the boot camp, 2 things happen. 1, I will unlock all the free bonus material courses that you can use at your heart's content. 2, I will send you 5 questions. I want to know what's going on in your situation. This is going to help me put together the 10 days, the 10-day boot camp. Actually, it will be 11 because I like to exceed expectations. We will do our first call either Thursday or Friday this week. In the evenings, I need to work it out with Olivia, which day is best for us. But yes, you can look for an invite if you are one of the boot camp members. Probably in the next 24 to 36 hours, you will get that shortly. So again, if you want to be a part of it, it is $1,000. Don't put it on a credit card. If you have to put it on a credit card, don't bother. You can watch the free content here. You can buy a $50 buy box deep dive. If you're ready to rock and roll and you don't need hand holding, just buy the course, $3.99, how to get started one rental at a time, save some money. All right, folks, take care of yourself. Remember, what I'm going to do next is record the Daily Financial News for Friday, which was Jobs Day, and then Saturday. All right, folks, take care. Have a wonderful day. Bye.